Hi, everyone. I just wanted to go through, I think most of the exam you'll be good with. Make sure you look over all the previous homework problems because a lot of it's the same or it's part of the problems or it's similar. So when you're completing the first exam, make sure you look over all of that. Also, if you can't find the answer there, then turn to the e-text, but I think you'll be good with most of it. However, it's going to take a long time to complete, so please allow yourself plenty of time to complete it. So let me just go, these are just a few things I didn't know if we covered enough, so I just wanted to kind of go through it to help with some of the exam questions. So the first one says, Bob had an accounts receivable balance of 10,000 during the month. The company performed credit services of 20,000 and collected accounts receivable of 12,000. What's the balance in accounts receivable as of January 31st? You could do this by way of a T account, and that's what I did here. I just decided to go ahead and put it in a T account, or you could actually physically add and subtract, either way. But what I did, the account balance was 10,000. They performed additional services of 20,000. You would add that to receivables, and they collected 12,000. That would be subtracted from the receivables. So 30,000 minus 12,000 is 18,000, and that would have been the balance at January 31st. This is it's a brief part of one of the questions, just because some of it, I don't know how to explain. These are just some of the questions you're going to see in an exam question. So the first thing, but this isn't like a complete question. There'd be more. I just think these might have been a little harder to understand just because we didn't cover these in depth either. So Bob borrowed 10,000 by signing a 10% one-year note on October 1st, 2022. And what we're doing is we're performing adjusting entries here. So for this one, it's a debit to interest expense, credit to interest payable, and the way we found that $250 is it's 10,000 times 10% times 3/12, because it's a one-year note, and here we're covering it for 3 months. It's October through December. Next one, Bob paid $1,200 for 12 months insurance on June 1st, 2022. Again, we want the adjusting entries, and now it's the end of December. How would we adjust this? We would debit insurance expense. We would credit prepaid insurance for $700. The way we figured that out, first we had to figure out our monthly insurance. So $1,200, divide that by 12 months would be $100 each month. We've used 7 months, right? June through December is 7 months. 100 times 7 is the $700 that we debited and credited. And the last one, on October 1st, the company collected 12,000 for consulting services to be performed from October through March. The way we would figure that out is how much would it be per month? It's 12,000. The number of months is 6, right? October, November, December, January, February, March. That's 6 months. 12,000 divided by 6 is 2,000 a month. 2,000 times 3 is 6,000. So we debited unearned service revenue and credited service revenue for that 6,000. Again, the reason we did that is because we've now earned those services. Now, in the problems you have, these are going to all be different months, different percentages, different amounts. This is just to give you an idea of how you would complete that. Again, the most important thing is allowing yourself plenty of time to complete. The only other thing I wanted to mention, in one of the questions, it talks about a car. For purposes of this question, use equipment for car. Other than that, I think you're going to be fine. But if you have any questions, feel free to call me. Good luck to everyone. I know you're going to do a great job. Just give yourself plenty of time.